But for now, Jim Stenning from Sphinx Securities standing by in Sydney. Jim, good morning to you. Let's talk cyclones, let's talk economic impact, and let's also understand the way the Reserve Bank, like the Brisbane floods, the Queensland floods, will perhaps read this one.
Well, good morning, Carson.
Yeah,
look, I guess you know, the Reserve Bank made it pretty clear that it looks through these type of events. I suppose, you know, it's unusual to have one happening immediately after the other, but you know, it does seem to me that they're taking very much a longer-term view. I think as far as the Queensland economy goes, you know, narrowing it down to the Queensland economy, I mean, obviously the recent events have made the forecasting very, very difficult. Fingers crossed, it does look like you know, damage to infrastructure be as bad as it possibly could have been. But you know, the mid-year budget review we had last week, only last week. I don't think we need to pop that in the shredder just yet.
All right, but we are getting the Reserve Bank's quarterly inflation projections, and they come out Friday, of course. That's going to be keenly watched because of all the people we keep talking to in Queensland and beyond are saying, look, like it or not, this time round after the cyclone, banana prices, sugar prices, these 30-year highs we're talking about, that's got to feed into inflation. You can't strip that out, Jim, and say it's a toppy number, therefore we'll pay no attention to it.
Yeah, look, I do think that's right over the longer term, but I think, you know, immediate effects will be sort of filtered out to some degree. I think, look, inflation is the real buzzword, whether it's here in Australia or around the world. Everyone seems to be paranoid. There's an inflationitis going on. I mean, you know, I think 2011 people are going to, or investors are going to be very, very sensitive to any indication that inflation can move higher.
And in a sense, they've got every justification because the more central banks keep printing money and the more that money is ripped out of one economy and shoved in another, it's exporting the problem.
Yeah, well, look, I mean, these are fundamental issues, I suppose, that are still playing out. You know, we've got a Federal Reserve who is keenly trying to reinflate their economy. They seem to be having some success. You know, inflation seems to be relatively high in the Eurozone and the UK as well. Obviously, those pressures on commodity prices and those type of things will impact on inflation here as well. Domestically, though, we do have one thing going in our favour, and it was certainly obvious through the last CPI print, and that is that the currency's going the right way for us. Not necessarily for the Queensland economy, though, and that's worth noting, I think.
Indeed, point well made in terms of that the conundrum for any export-oriented state as Queensland is, not to mention, though, its domestic focus on tourism. Let's talk Ireland, meanwhile, overnight action there. Another downgrade, another kind of vote of no confidence. But you're saying what? Markets will largely be brushing that one off?
Well, they appear to be doing just that. I suppose we've seen a pretty comprehensive rally across those sort of Euro-peripheral sovereign issuers overnight. And I think, you know, there seems to be this sort of belief that you know, the European Union has resolved to stand well and truly behind the bailout. So that does seem to be getting some momentum or some belief in the market. Whether that's longer term remains to be seen.
Is everyone sort of in the meantime? It seems that there's all this attention on earnings season and optimism there that, you know, okay, we've smashed expectations on many levels, but where dust settles from that, there are unresolved issues, principally housing and jobs, and Friday's numbers. Are you optimistic?
Look, no, I think it's an interesting point. I mean, I think if these payroll numbers on Friday night are positive as they're expected to be, and maybe they even surprise on the upside, then that'll really continue this momentum. But you know, to use a much-coined phrase, there's a number of elephants in the room that are fundamental to the global economy over the longer term that sort of are being conveniently ignored.
Well, and that's interesting that in light of that, investors are still running for the hills when it comes to the bond market. You know, there was talk of QE3 overnight. You would have thought further issuance might have sent a signal that there was every reason to be in those bonds.
Yeah, look, I think one of the things that's interesting, I mean, we've seen through this Egyptian crisis an immediate flight to quality, a weakness in equity markets. That seems to have been erased. We get a reasonably positive print in some economic data over the next few sessions, and treasuries have weakened considerably. I think, you know, markets are going to, particularly if we get a good print on Friday night and payrolls, markets are going to be focusing on when does QE2 end and what's the effect on underlying rates in the bond market. So I think there's a tendency for markets to move out of long duration fixed income at the moment.
Just briefly, finally, as well, there was this debate about whether the US would exceed its own debt ceiling and therefore call into question its own credit rating. And it looks like they've been sort of slicing and dicing and getting the numbers to come out the way that suits them to buy them some more time.
Well, that's right. I mean, you know, they have to abide by the rules, but luckily in their case, they're making the rules.
Yeah, well, I think you could say the same about Canberra. 9 times out of 10, politicians, politics, and all of that, fun and games. Thank you so much. Have a good morning.
Thanks, Gus.
Right. Jim Stenning there from FIG Securities. Let's return to